Sure.
Let's see.
How's everybody else doing? Mark, how you doing? Mike Pearson.
I'm doing good. How was big caps for you guys?
They've been fine. A lot of good range, so can't complain.
Really?
Yeah,
Okay.
big
Not a
caps
lot of
are
faders?
usually good.
Because I remember for a while the big caps were like all over the place for you. Some of the typical strategies you guys were implementing weren't working.
Yeah, in November it was exceptionally difficult. It was just like Chop City. Literally the best week I had in November, I like was like sleeping in till like 10 o'clock intentionally because I knew at like 10 to 10:30 was like this window of when the trades were working in November. So I just kind of avoided all the 9:30 to 10 o'clock trades. And that was my
I,
best week in November.
I
Uh,
guess I guess all that's back now though.
oh, it's all better now. Like the past two, this week, my opening trades um, were not as good though. Just to show you, this is something I just started kind of tracking, and I'm gonna go back on testing it a little bit. But like here is this week 1-3 to 1-7. My opening trades, the win rate was only 38%, which is like super freaking low. And then from 935 to 959, which mind you guys remember, I'm a scalper, uh 72% win rate at that window. But then the past 2 weeks, my opening trades in the first couple minutes, like if I see a setup happening and I'm taking it, uh the past couple weeks it was 100% win rate.
Right.
So yeah, so this week it was better to wait to take trades in that like 935 to maybe 945 window. So I recommend if you guys aren't tracking this, like kind of just as simple as this. Some people get like really in depth with their tracking. I know Top Tick does, and he's got some great stats, but he's disciplined enough to kind of go through it and stay on it. Where me, I don't take that much time for it. I just want to know roughly what's happening quickly. And doing something like this is so simple. So, and it depends on what style of trading you do, but I think that this is very significant because before what I was doing was I was like tracking my trades. Like in November, November was my worst month, I would say probably of the year because I was sizing up in October and I like was crushing it in October and doing really well. And then in November, the market got choppy and my opening trades just like weren't working. The
Right.
breakout and the move higher on my longs, they didn't have it. It was lackluster. So um, I started tracking. I wrote down like every day the time I took the trade and then if it worked and then when like did it like just stay choppy till. And what I was tracking uh in November was that my opening trades were like had like a 62% chance to fail. So it was like they were like 38% accuracy for
Right.
like that whole month. And then and December it was all better. But now what I'm kind of doing, and I got to go back a couple more weeks, but now what I'm doing is I'm just tracking each like time frame that I'm kind of watching, like from 9:30 to 9:32, 9:33. That's an important time for me because I'm catching those like under overs, which is my favorite, and then after that it's like different setups. It's like curls and things like that. So um, this is just a thought. This is something I recommend everybody to do. Because if you're seriously like a going for $1,000+ days, or $3,000 and $5,000 days, you 100% have to do this because this is going to show you when something's not working quickly. Like let's say we go back to another month similar to November where for me the opening trades aren't working. Well, after like this week of
Hey,
having
hey,
like
hey.
38% accuracy,
I'm done.
Next week for my like under overs,
Hey,
I'll size it down a little bit. And if my
ticket.
accuracy is still low,
Lay down.
maybe I'll just start avoiding them
Lay
altogether.
down.
Because what happens with the market is that the market changes. Our setup was working, it was doing good. We're feeling more confident, and then the market changes. And then now that window where we were trading and it was working is not working anymore. And you're going to have to wait maybe 1 month until it comes back, or 2 months sometimes it takes. Like we get times where like under overs work every single day on big caps. Like a whole week straight, it'll just be like under over, and it'll be the easiest trading ever. And then you'll get other weeks where it's like there is no good under overs and they weren't working at all, like this past week. So you got to adjust to that. And too many traders fail because they're not able to quickly adjust. So that's where I've kind of found that the stats, that Jay's saying, oh, do your stats, do your stats. It's so significant because of that, because you can see where the problem is in the market and you can adjust quickly.
Right.
Any thoughts on that, you guys?
Um, yeah, I mean, the setups go in and out of style depending on market condition. Um,
Exactly. But too many people don't know when it's not working and they don't adjust fast enough. And
yeah,
that's where the stats help you because you're able to adjust quickly. Like if next week my win rate on my opening trades, which went from 100% win rate to 38, and so if next week it's low, then I'm going to size down or maybe not even take some opening trades and just kind of avoid them. Because like this past week, 72% win rate on trades from 935 to 959. The that window, those trades made the money for the whole week.
it's good.
So you
So
logged in every single scalp you made on Excel?
I just put it into TradeSync. I just upload it.
Oh, and then you can use it on Excel.
What I did was I just like in TradeSync, I just filter it down, and then I like kind of look at the times, and then like I'm like, okay, from 9:30 to 9:32, this is how many
Oh,
trades
okay.
I took. It was
You could
10 trades or 7 trades, and then I'm like, okay, well, 5 of them I lost, so 5 divided by 7 gives you the percentage, of where you're at.
Right. Okay, that makes sense. I was gonna say, like I put my trades on Excel, and I was wondering like, oh man, it's gotta be rough if you're a scalper and you're not using anything but Excel.
Yeah, no, that's over trading. If you're doing more than 10 trades a day, like scalping, getting in and out, then um, doing stats sucks because like it's hard to like mark up and like write up all those stats, So, which believe me, I'm a fast scalper. If I could, I'd take 100 trades a day, but
Right.
that's not what is supposed to be done. So like I have a rule now where I only can take 7 trades a day. And then that's where I avoid over trading, because if I get over 7 trades or 40 tickets, I'm like starting to tell myself like, okay, it's supposed to be done here. Like things are obviously not working. You're not hitting any home runs or anything along those lines, because if I just keep trading and I'm not aware of how many trades I'm taking on average, then you just can overtrade. And then you look at your stats at the end of a month or at the end of 6 months or a year, and you're like, what the fuck was I doing? So, you know, and that's what happens.
For sure.
Any other thoughts, you guys? Want me to start pulling up charts?
Let's do it.
Okay, let's let me pull them up. Here we go. Okay, this one's from MJ.
Okay. Yeah,
MJ,
so
you want to walk us through this? Okay, and real fast, you guys too. I'm gonna I press on Zoom annotate, so like I can like kind of draw things like that.
there we go.
But you guys, if you have the desktop, I believe, you can press like there's like an option somewhere or options on the screen share, and then you can press annotate too, and you can draw on the screen also.
Yeah, I think I can draw on the screen. There we go.
Okay, perfect. Yeah. So,
Yeah, got it.
if you're explaining something, just kind of guide us a little bit better that way, because sometimes I don't know what candle we're talking about.
Yeah. All right.
Okay.
So, yeah, this is my trade, and I don't usually share my charts or anything because I'm still very much in the learning mode. But I've done a lot of, thinking and self-analysis as to what's kind of driving my trades. That's what I've been spending a lot of time on. And, I'm a big cap trader typically. And I used to do futures a long time ago, scalping off the DOM. Um, and, what I realize is that if I get really narrow vision into, one type of thing that either pays me or doesn't, then I get a lot of fear and greed, getting in the way. I need like a lot of different things to choose from for me to kind of keep everything in check. And so I've kind of diversified into learning small caps. And so I'm kind of learning different aspects of small caps. And for me, I have to have money in the game to have, um, to really check my feelings and, drive my actions. But it's all small size. So at the end of the day, it doesn't really affect my P&L whether I win or lose. But it does help with my emotions and for me to analyze how I feel. Um, if it's going against me, how fast it's going against me, or if I made the right trade, if it's going towards me, where am I getting out at the right spot and so on. So that's the way I learn and get better. And so Jay will probably have a fit when he sees this. I just said it to him yesterday. All the stuff that I'm not supposed to do, but for me, it helps just knowing how it feels to do the wrong thing, so I don't do it again. Um, and so I do a lot of these things where I just kind of, with the retail mindset or prior to Jay, if you will, I would have done something. What does that feel like? And then from there, I know, okay, don't do that. Do what Jay suggests because it really is the right thing to do. You know, I don't know if anybody else thinks that way, but that's the way I operate. Um, so in pre-market, and I was looking at in small caps, you get this big drive up, and normally I look at this and be like, hey, this looks pretty good, pretty consistent, 9 EMA scalp type situation. So I took a long here, which I don't think you're supposed to do, but you're supposed to wait for the backside. But I mean, that worked, just looking at price action. But then here I saw some weakness. I got in. Can you see my cursor?
Uh, I don't think I can see it.
Oh,
No.
okay. Well, never
Plus
mind.
sign.
No, that's mine.
No, that's him. Okay, so here, so I got in here. Here, I'll just do that.
Okay, there we go. Perfect.
Not there. That's where I exited. But the red arrow, I saw some weakness coming down here, and this is when I realized, you know what, I'm not supposed to short on weakness, and so I I got out immediately here, but I hit my partial and not my coverall, and next thing you know, I'm getting squeezed, up this way, and this is where, I got out. So this was my first, real money squeeze, and man, my heart rate was just skyrocketing. First time I've ever been squeezed, right? And it's not much. I think it's like maybe $20 or $30 or something, but um, that's kind of what I want to experience. So I know not to do that again. So really be careful about this kind of stuff next time. Anyway, it finally took me out over here. And let's see. Can I undo all this stuff here so I don't mess up the charts? Okay. So I think The other thing that I'm not sure of yet is how to know it's the backside. Because from what I've learned so far, here's kind of it's probably not the right arrow, but looking at let's see. Um, Sorry, I'm trying to figure out these commands here. Mouse. Can you see my mouse now?
Hmm.
Okay, better. So I know from if you look at these tops here and you see a volume divergence, that gives you some indication that
I
you're
don't
getting
think
some
we,
weakness.
I don't think we can see your mouse.
You can't see my mouse. All right,
Yeah, there is a
sorry.
spotlight button. I don't know if that.
Here, there we go.
There you go. Yeah, so you got the top here,
Yeah, and if you
double
see a
top.
volume divergence,
Mm-hmm.
that's what indicates that there may be a weakness coming, I guess, there, or you're on the backside. Anyway, I didn't see that, so I didn't know that was the backside. But I did see, rejection of VWAP here, and so I put some size in here. I'm using your hotkeys, Eric, with fixed risk.
Okay, yeah,
Um,
those are really good. Yeah.
yeah, it's really good. I realize in big caps it worked really well. In small caps, I don't know because I was trying to add size here, and
Okay.
to add size, it's kind of hard to, because I'm getting, you have to get you have to buy the shares, right, through the locates. I guess first time I'm
Okay.
doing locates. Um, and so I got 500 shares, but I can't go all in, if you will, at the top, right? Because I'm doing fixed risk. I don't know how many shares I'm going to end up with at the end,
Yeah.
right? So I'm not sure if fixed risk works,
Mm-hmm.
that well
So
for
you
small
were having
caps. I
to
don't know.
you took the fixed risk hockey and then you were having to add.
Yep, I just added till I
Okay.
got to max size.
Okay. Which
Um,
that's kind of good to do sometimes too, because if this thing starts to squeeze, you'll be happy you're not jumping in with max size.
yeah, no, that's a good point. Yeah,
But
so I wasn't sure if I'm going to stick with the fixed risk or go with shares long term. I don't know yet.
the reason why I use those fixed risk hotkeys is because let's say I wanted to risk $100 on the trade
Hmm.
and with the fixed risk hotkey, you lose $100 when it hits your stop loss. But let's say I'm calculating it on the fly and Tesla's moving, almost 10% in one day.
Hmm.
It's up. Well, if you miscalculate that, now you just took a 150, 200, maybe even $250 loss.
Hmm.
And for me, when that happens, I get triggered. I want to jump back in and to fix it, right away instead of waiting for
Hmm.
a nice clean setup. And yeah, so for me, I would always get triggered and then it throws off my day. And then I go to max loss quickly because I miscalculated something. And I
Yeah.
was finding that that's where my problem was kind of stemming from, where if you have the controlled risk, like, okay, if I take, uh, you know, X amount of trades based on my max loss, I should get 4 or 5 stop outs in a day, and then I'm at max loss. So
Yeah, no, I totally get it. The thing on the big caps is, the price is different, the range is different. With the small caps, I mean, you're talking, cents to dollars, and it's fairly, in my mind, kind of, okay, this is about 20 cents.
hmm
Um,
yeah, it's easier
it's
to
a
calculate.
it's a little bit easier to calculate.
Now, where was your stop loss at for these? At high a day or at this?
Just above VWAP there.
Okay, the blue
Um,
line is VWAP.
yes.
Okay,
Yep.
and is this dotted line the 9 moving average?
Yes. Mhm.
Okay.
And so I started taking partials here at Gondola asked if it was hard to get out of the squeeze. Yeah. Yeah, I was hitting my limit orders, all up through here, and it finally just took me out,
hmm
you know. Um,
I also have a
yeah.
limit order that adds like 5 or 10 cents, like spread, so that
Mhm.
way in pre-market you can get right out. So just a thought for you.
Yeah, no, that's a good point. Yeah, that's a good point. Um, I'm not sure if that works because I was hitting it
Yeah.
all up through here. And I was
Yeah.
just like, okay, I guess I'm just writing this one out. Um, but yeah, so, all through here, I'm taking out partials, um, added more here. I'm still probably got half my shares still, probably 250 shares still here. Um, took more partials here. I should have added here. Um, well, I should have added here, but I was getting kind of greedy, um, and I didn't want to lower my average. Um,
And you made it to the 3-minute J lines and you added here?
I did, and this is pretty dumb ad. When I look at the stats for this LIXT, when you look at the daily, every gap of this magnitude filled all the way down. And so, I expected this to come, all the way down to at least here,
Yeah.
and so I was like,
Yeah, it
and I was up for
seemed
the
good at the
day.
time. Yeah.
Yeah. That's the
Yeah,
other thing. Like if I'm up for the day, if my first trade, I usually it's very low risk, if you will, and I want to get up on the day, and then I use the rest of the day to do just I don't know, just make more money. This is where the greed
mhm.
factor comes in, and sometimes it works and sometimes it doesn't. But if it doesn't work, I'm still okay because I end up, green still, because I made money on that first trade.
Yeah.
So yeah, this didn't work. Stopped out, and then I got, I do work full time. I got kids that I take care of, so all that still
Well, you made it
factors in.
work here. So, okay, couple thoughts on this trade. So let's see here. Okay, couple thoughts on this trade real quick. First off, this long here, definitely got to be careful with that one. You took it fairly close to the 9 moving average, so that that is better. So like a lot of times people take like a long up here, or something when it's like you're far away from the 9, and this goes for big caps too. You want to just try to take your long positions as close to the 9. Same thing with shorts too, but unless it's like a stuff, but you want to try to take it as close to the 9 as you can. Then, if we just draw a line from here and either we connect not this bottom, but this bottom, we got like somewhat of a trend line here. You could say that there was like a slight trend line like with these ones, with from here to here. And there's that. And then the other one that I kind of like is this one right here. So um, the thing is it makes this high here. And I know a lot of these guys that primarily trade small caps, what they would have been looking for was you see where this thing tests what is it, $3 again? Multiple times it tests $3.
Yeah. Hmm.
310 is it? Let's say.
Hmm.
So like 310 was the level and $3 was the level that it was like rejecting. So what you want to see is like it rejects it one time, it comes back up, it rejects it a second time. This third time where it's testing it and then now it's starting to fade back down. Sometimes even on the second time these guys are taking it, that's where they're trying to short off of this level. And that's where, if you've got bookmap liquidity over top, there was probably a good wall of, sellers at that 310, right?
Yeah, it's a good point. Yeah. Hmm.
So you want to use that book map, or on your level 2, you want to see a big order there at 310. And then you want to also see when you're getting down here and you're starting to fade back down, do they reload at 3? Does a heat map show up at 3
Hmm.
when you're below 3 again? Because that's adding like that liquidity pressure on book map.
Right.
So
Right.
so if you didn't get here, this stuff, then you just let it ride down, okay? And then you wait for the next lower high pullback. So it starts to pull back, and then now it's going to make this lower high. And what level is this thing rejecting at? VWAP. Rejects VWAP here. It can't close above VWAP, but like one time it looks like it like almost closed above VWAP. Some like really bad attempt on the buyers. So you know that you got like this wedge kind of starting up, I mean, you could draw this like a bunch of different ways, but this is an ugly wedge. But um, you know that it's holding VWAP, rejected here. So it's rejected this level multiple times, and now we see it rejecting VWAP multiple times. And you're making the lower high. So you're looking for kind of shorts in this area with your stop loss, you know, as tight as you can, probably 5-10 cents. It probably could have shook some people out, but this is where it made that new 1 minute high right here. And then as it's making these like 1 minute highs above this little range here, it's making a new high here. That's where all the short sellers are like, oh shit, like this thing could just start going up, right?
Yeah. Mm-hmm.
But what does it do? It stuffs and it makes a fake breakdown. So this is a great signal to add more into your position. So what I'm always looking for on big caps when I'm trading and scalping is fake moves. So like, let's say it starts to pull back and then it makes another 1 minute low, and then it makes a 1 minute low, but then it gets bought up and ends as like almost a doji candle, and then now it's making a new 1 minute high. So it was like a fake breakdown. So I'm always looking for fake moves because they're clues to the direction you're trying to go. So, you know, fake breakouts here, it's fading lower. Fake breakouts here, and then it's fading lower. So, you know, if you were shorting at VWAP for the VWAP rejection, that would have worked well. If you were watching this 310 level, you know, when this thing's climbing up here and you're kind of around here, instead of longing it, what you want to be looking for is like how it's going to react at $3, because $3 is your main level to play off of. You know, lately they've been doing this like 310, you know, an extra 10 cents type of thing. So you got to be aware of that as well, where they like let it slip through and then they fade it down. But I think that would have been the way to play this thing. Some of the other small cap guys can comment on this, but looking for this lower high and VWAP rejection is very significant. You know, shorten this thing heavy and maybe taking some off at the J lines, like for the scalp, and then your next target is the 3 minute J lines. So you'd be taking your next partial here or here, and then this thing pops up and then fades down. This was a pretty lousy pop at what, 12 o'clock. I mean, this thing took a long time. So so yeah, so those are just some thoughts for you. Make sure you're just drawing trend lines, because
Yeah, I'll be honest, Eric, I suck at trend lines. I mean,
then that means you need to draw them all over and delete them. Like, I'm always drawing trend lines and deleting them, but I'm telling you, you should, because they really help. Some people can just kind of see it in their head, but like I need to kind of draw it. Sometimes I don't need to draw it now because I've been doing it so much, but they really help, where you'll see a wedge and then the breakdown, and they work so well. And with small caps, the main strategy that they're trading is in pre-market is like a golden zone rejection with the trend line break. You know, so when you get that trend line break, that really helps. So, and some of the guys who trade small cap, you guys can kind of comment on this, but yeah, those are some of my thoughts.
Definitely agree, Eric. And trend lines are so important, especially in the small cap land. They help me anyway so much, because that's what I look for: trend line break, rejection of the J lines. That's all I look for.
well, yeah, I've used it in the past, and I suck at it. Like, you know, I'll draw a trend line like this, you know, and then, you know, look for a short here, and then, you know, I get stopped out.
Do you know where you're drawing the trend lines from? Like what you're supposed to be doing with a trend line? Like,
maybe that's the issue. I don't know. You know, I'm just taking, you know, a couple tags at the lows.
do you draw it off the wick or do you draw it off the body?
The wick.
The wick. What do you do? With it?
I like to draw it off the wick, but sometimes in this situation, you got to kind of use the bodies when it's like so sloppy. But
Yeah.
I would have drawn the same thing, MJ. I would have drawn this like this, and then I would have seen how this trend line break reacts. And what does it do? It like barely goes lower. So then I go from this bottom and I connect this wick right here, because that's where it kind of made a pivot. Then I would draw it like that, and then what happens when it does a trend line break? It's garbage. So then I would draw it again like this. And then what happens? It doesn't quite work, you know, and then finally it like fade. It makes it like, it does like this trend line break, it looks like. Kind of like that.
All right. So I
So
used to, yeah,
Mhm.
go ahead.
I
Go
was
ahead,
just
Mark.
going to say, you know, on these very steep ones, sometimes the trend line breaks don't work that well because why? We all think it's like very steep and then it's going to come straight back down. And that rarely actually happens, you know? So
Mhm.
in that case, it doesn't work as well. In cases like this or like this, where I connect this top to this pivot down here, this is a level where I'm like watching, like, okay, is this thing going to squeeze back up and curl back up and go? So, you know, this kind of can tell you if you need to hold the trade or not, or how it's going to react. So,
I
you,
I just I'm bad at drawing. I just drew a horizontal line. I don't know if it was the right color, but I think to simplify things like that, that's almost to me the really obvious one. It's not so much a trend line there as it is a level because prices often work at levels.
yeah,
And in that case, like, let me try it again. There's the really, really clear horizontal. How the hell do I do this? Because something like this, right? So you have that
Yep.
launch. You get up to it. There's a consolidation below. You have a launch above. Then you have a test on the bottom, then a bounce, and then it goes up to new highs. It rejects that. It comes back down under it. Fails. Tries to go back over the line. Rejects. Comes back under, and then you have something really clear is this, right? Then you have that final breakdown, that last gasp of the buyers to reclaim, and then the fail. So I do draw a lot of slopes in my trend lines, but sometimes I miss the most obvious thing, which is like, hey, there's just a price level that's horizontal, that's in an area that people are fighting over, and then
yeah,
that to me is the clear one here, right? You go over it, you go under it, and then you have that last gasp, and then you fail, and you go to the J lines.
yeah,
Right. And you can see that, I know that, and that's where I saw the book map, the heat map on the book map, because it's all lines. You can see that price level. And so for me, that is clearer. And you can I feel like I can set my stops better, based on that price level, whereas the trend lines, and I'm all over the map with trend lines. And I've gotten burned so many times in the past. I've kind of put that aside and just gone with price levels. And that seems to be working for the most part. But I do miss, some of the moves, way up here, because of that. Um,
but
so I don't know.
that's so the thing though with catching these moves better is
Right,
you need,
the rejections at that price level.
yeah, like the
Yeah,
stuffs that
yeah, no,
happen.
no, that's a good point.
And but also the way to get better at those is going back and doing replay. So I don't know if you've got Bookmap that you can do replay. I don't know if you can get DAS, or I think there's like a trade sim or something like that. But
Yeah, so I've tried replays in DOS before, and what I feel works better is just recording my screen because there's so many things that I am looking at. I mean, I say so many things, but I'm looking at Bookmap along with the chart and looking at level two and time and sales. I'm looking at all of that to come up with the thesis, right, as to what's going to happen. And when you do replay, you can't tie all of that together. And so it's not the same experience. But
yeah,
what I do find is when I record the screen and I go back, I look at, did I miss anything? Were there better signals? And that way the next time I pay attention to that, whether it's Bookmap or level two or whatever,
yeah.
I pay more attention to that,
Yeah, it's definitely important to record the screen. I still record the screen and go back and watch the tape. And like, what I'll do is one time I'll focus on just my time in sales, and another time I'll watch it again and focus on the level two and see if there's something I missed. So I agree, but I'm telling you, doing replay, it it can really help if you put a lot of time into it because, and all you do is you skip ahead, you skip to like 9:15, 9:20, or just like the open right at like 9:30, because like from 9:15 to 9:30, Jay doesn't like to take trades anyways.
right.
So, you know, you skip to like 9:29 and then you just trade this thing from the open. And then you focus on trying to catch this trade here with the VWAP projection at this price level that Pete's mentioning, and then potentially this like kind of over under that happens quickly at the open as well. But I'm telling you, the replay is what has made me really good. That's what I give a lot of credit to with my trading, is because I would sit and do a number of replays, like here on the weekend. I would do a few different days or more, and then it's like you're logging so much more time, because in replay, when you try to trade this, you are not going to do it perfect, even if you just looked at the chart. Like, you'll see the ticks happening and you'll still make mistakes, and so it's really good to practice and refine your rules in replay. So I mean, for everybody that's trying to get better quickly and you don't want to take the long route, doing replay is like one of the best things you can do.
So
If I can ask the small cap traders here, would you have taken partials, all the way through here, or would you have just taken one partial at the 3-minute J lines?
I think that depends on the style of trader you are. For me, for instance, I would have just taken a partial at the gap, at the 1-minute J lines, and then I would have held the rest, because
Okay.
I see no reason for me to exit if the stock doesn't reclaim VWAP in a way that is strong in volume and shows me that they want to keep the stock going up.
Yeah, that's a good point. And plus you're, I guess, raising your average here, right?
Yeah, if anything, well, I did trade the stock. I traded I traded this at the pre-market high today. And I'm under the PDT, so it's not like I can put unlimited trades, but if I was able to trade it and I was watching this and I was acting in my head what I would do if I could trade unlimited amount of times, I would have traded where I did at the pre-market high rejection, covered it at the 1-minute J lines, and then at the VWAP, once I see it reclaimed, I want to see like a little bit of a fast stuff. And then when I see that, I'll do like 1/3 of my total size at that point, so my average doesn't go down that much, and I'll set everything down to break even. So even if it tests VWAP like 3 times, as long as it doesn't explode up and go back to my average, which is still fairly high up, I have no reason to get out. But at the same time, though, I don't think that after like the 3rd try, if it exploded up, I would have waited for it to hit my average. I would have seen that, oh, okay, it's still fairly bullish, and the market makers and the retail players are looking to keep this up, so there's no need to see if it'll go up to my average.
So are you saying, where I just drew the circle here, are you saying that here you may have hesitated on adding because it's the 3rd retest?
No, I probably would have added. Actually, I when I was watching it, where I added in my head was around that, let's see, 10 o'clock area. That first time it after it touched the 1-minute J lines. No, not that one. The first one.
Okay.
I put 1/3. Yeah, not that one. The other one prior to that.
Yeah.
I put 1/3. I would put 1/3 size, because I know that even if it tests VWAP again, if I put 1/3 size, my average isn't gonna go down that much anyways, right? It's not really hurting. And I also took profits at that point because it touched the 1-minute J lines, and so I already have more leverage in that regards. And so what I want to see for me to cover and have my thesis be destroyed is if it closes above VWAP with a stronger volume, and then it keeps pushing up.
Yeah, gotcha. May I ask you, would you have added here?
What J lines? That's the 1-minute still, right?
Yep, it's the 1-minute J line.
Yeah, as far as I know, it's been rolling over fairly well.
Yep.
It bounced off the 3-minute J lines, and typically at that point, again, my average is so high up that there's no need to be worried. I would probably put my stop loss if I did add there. I think at like 250. I'm not sure where that little relative high is after that huge dump below the 1-minute J lines. Oh, I could draw. That's right. I don't know why I'm like trying to explain it.
The only thing about an ad here is that this wasn't really a high volume kind of stuff. So
Yeah,
gotta
no,
be,
that was just for me. For me, actually, this is more hindsight, honestly. But in regards to like, if I'm already like, let's say my average. Okay, I would short here. I would cover here. Then I would have added here 1/3 size. So my average, which was right here, is now probably like right here. Then I would have seen this breakdown, seen this, and maybe if I did add here, which I'm saying is hindsight, I don't know if I would have. My average, again, I would have only shorted 1/3 size, and by the time it also touches the 3-minute J lines around here, if it does, or was it here? I'm not sure.
Yeah.
I would have covered even more, and so my average would have gone down. My average wouldn't have gone down even more. It probably would have gone down like right around this area.
yeah, that's true.
So, and then like in that same case too, I don't want to. If it goes up in this area, that's pretty shady. So for me, I would have put my stop loss here anyways.
Yeah, so good point there.
Or if I wanted to play conservatively, there's no real need to let it go above the J lines and curl up. And so I would have probably, if I wanted to play more conservatively, if I saw a break of the J lines, 1-minute J lines, and an attempt at a curl, I would have just got out. And it's like what? This is already like 15%, 18%. I'm not sure. I'm not doing the math in my head. That's already enough for the day. There's no need to be greedy. So,
Well, just one other thing, Eric, that you know regarding the hotkeys. So often in small caps, I do hear this, right? Or, you know, full size, half size, quarter size, and so on. And it's really hard with fixed risk to get in and know what is quarter size, right?
Well, I have like two hotkeys. So like, let's say the most I want to risk on my initial trade is, let's say my max risk is, let's keep it simple, $100. Well, I also would then have a hotkey that's $25.
Right, but it depends on where you put your stop, though. Right?
Yes.
So, I mean, if you're really going in quarter size or half size, your stop distance has to be the same between those two trades, right?
Yeah, or what I do is like, let's say I'm starting a short here, but I'm not 100% sure. So I'll take a $25 risk here with my stop loss up here at $25. And then when I'm looking to add, what I'll do is I'll like maybe add I'll just do 100% add from this one. Like, so like, let's say I got 500 shares or let's say 250 shares. And then when I add again, it's 500 shares. And then I know that if it gets all the way up to here, then, I've doubled.
I gotcha. So you keep your stop the same, and you just increase the dollar size, right? So,
Yeah, or like
gotcha. Okay.
like Mark is saying, which is really important to do, is you start. What a lot of these traders do is they have their stop loss here, they have their average cost here, and then let's say I took an entry and it ended up giving me 250 shares. Well, when I'm doing the add here, I don't want to bring my average cost too close. I want to just notch it down. So what I'll do is like, let's say I had 250 shares. When I'm adding here, maybe I'll add 50 here, and then it pops up again 50 here. And then now my average cost after adding 100 shares is maybe only like right here. So that way I have this cushion here if it does squeeze up higher and it invalidates the trade. You don't want to bring your average cost too close to price because then you can easily get shaken out. So, I'll take my initial entry with the hotkeys saying, okay, I only want to lose $25 on this trade. And then I'll look at my share size and it will say, okay, I've got 200 shares. And then what I do is I'm like, okay, with 200 shares, I don't want to move my average cost too close. So let me just add a 50 share here. And then that way it has a cushion, it can move some more. And then maybe I'll add another 50. And then that way I'm not bringing my average cost too close to the current price. And then that way you've got those ads, and the targets are still the same. 1 minute J line, 3 minute J line. The 1,000 MA as the final target, which it just didn't get to it right. So yeah, I mean that's just one way to do it. I would keep testing the defined risk hotkeys if I were you, because if you
Okay.
build your system around it, you're always going to know how much money you're losing. And the
Yeah.
problem with trading often is like let's say this thing was really moving fast, and on a $2 stock, we normally take 200 or 500 shares, whatever the number is for you, and then all of a sudden this thing's really moving, and I took 500 shares, and then now all of a sudden, boom, I took a $250 loss, and I'm at max loss, let's say.
Yeah.
MJ,
And,
I know about your question. Carfred does. I think you can ask Carfred if he's still doing the set dollar risk hotkeys, because he trades small caps and he adds, right? So I
yeah,
understand what you're saying, that when you add, and you're using defined risk hotkey, it's harder.
yeah,
But I don't have this hotkeys, but I'm pretty sure you already know how to add. You just basically, add whatever you take out, or half of it, or one third, and
Right,
then,
right.
so that you can get an average. But I see what you're saying, with the intricacy of the key, because just like, you're gonna have to select a new stop out point versus, just getting maybe added and getting a new average, right? So talk to Alfred about it, because he
yeah.
does this.
Yeah, I think
Um,
that he probably doesn't use those hotkeys as much anymore, but that you don't have to when you've been trading for X amount of years. It's when you're like learning small caps, or even learning how a new setup works on big caps, that you need to have very strict kind of losses, max loss, and kind of defining how much you can lose on a trade. And too often, if the market's moving quickly and the VIX is up, it's easy to make a mistake, and then all of a sudden you're not going to trade well that day.
yeah.
There's been so many days that those hotkeys have saved me, because I'll take maybe like $100 risk starter, and then I'll lose, and then maybe I'll try another one and I'll lose again, and then I'm like, okay, something's not working today, like the market's not working for me based on my setups. And then what I do is I like will size it down, and then I can kind of work my way out of the hole. That's like one thing I'm really, really good at is if I'm down on the day, I can dig out of the hole before even getting to my max loss. So like if I start to lose and I'm like, okay, I'm halfway to my max loss right now, I don't keep the same size. I actually size down, because what I can do is, let's keep it simple. My max loss is $400. I take two $100 trades and I lose. And then so I would technically have two more $100 trades, right? To be at $400 max loss if I lost. So what I'll do is I'll take like a $50 risk. And then if it starts working, I can add to it, and I can scalp and take some size out, and then I can start to dig myself out of a hole. Because with $50, if you get a 4R trade, you've just cleared all your losses. If you've added to it and get 3-4R, you're now positive on the day. So if I were you, I know that it seems kind of weird using those hotkeys, but I would stick to them, because I'm telling you, they can really, really help. And there's a lot of good techniques with using them for digging out of a hole. If you're at red on the day, how to go back to green.
Gotcha.
And so what I tell people all the time is, if you're winning on the day and you're trading well, start to size down, because you're going to get overconfident and you make a mistake, and then now you've given back too much profit, and then quickly we want to make that profit back, and then it makes the day worse. And Top Tick will tell you all about that, because pretty sure that happened to him just a handful of days ago.
Yeah.
And
Listen, guys, I don't know if I just want to add into what MJ was doing here. So, the, whoever's rigging this market, they're using the same move to go ahead and bring it down. Like you see, even pre-market, so they do a distribution pattern, right at the top there. So what you're gonna notice is that it does a first wave, second wave, third wave up, and then the second wave is lower high. Third wave is a fake high with a double stuff, right? So when Jay tells you guys like, oh, I'm not gonna enter until I see a stuff. I know normally he does a parabolic moves, but sometimes it does also work when you see a distribution pattern. They do this like at least 3 times. See the drawings, right? So they make a high, they make a lower high, so they collect shorts, right? And then they make the fake high and then double stuff, right? Again, on the second trend line break here, and then again midday. But you see, this is I guess the best entry is that when you can see that everybody's now collected, and then they try to go ahead and set up a trap, so like a fake out. When you see that happen, even if it's great if you enter through the wicks, but even if you enter on the trend line break, oh well, it's good now because like you see the traders trap. When I used to trade counter trend, we always say always think that, well, when you see that somebody's already trapped, or somebody already took their stop losses, or there's already a lot of volume that's been collected and the move has not yet happened, this is the best situations where you're gonna expect like that whatever move you're after is gonna happen when you see the trap traders. So, but over here it's just pretty obvious. They're just doing it, using the same pattern pretty much 3 times a day, or 3 times this day.
Perfect.
Yeah, good stuff. Yeah, I think,
Okay.
Yeah.
MJ, is that
Overall,
enough? Go ahead,
Overall,
Mark.
I think the market's been weak. I don't know about you guys, but everything's like trading pretty hard with good range. And at the same time, like there were 2 stocks that were stellar this week that I missed out on because I wanted it to go like at a certain level, right? There was like one stock, I forgot the name, where the pre-market high was, let's say, I forgot the price, but let's say it was like at 8.15, and it didn't even touch that. It went up to 8.14, and then it died down the rest of the day, and like with really good range. I'm not sure if you guys are getting that with big caps, but like for the small cap guys, I'm wondering if you guys are being more aggressive right now because of how
I'm always aggressive, dude.
I can see that for a scalper for sure.
I'm just kidding. Now, the range is definitely awesome on right now on the big caps.
Yeah.
But it's more of a you're playing in a prior day range, so you got to be careful.
Yeah, like I'm seeing a lot of the guys that are in the room like chasing the market open weakness, and I'm wondering if like that makes sense right now for the cycle that we're in, because everything's not the only ones I'm seeing that are like popping up a lot and are like the low float stocks, but the higher float stocks that are above like 5 million float, they've been dying, and I don't know if I should be as aggressive with, or I should be as particular with my levels, or if I should just short it at the weakness at market open and then see how it'll go after that.
I know a few of the guys were saying yesterday that the pre-market trading on small caps has gotten a lot better and easier.
Yeah, even the intraday, I think, but I keep missing it because it's a lot.
If you
weaker than
remember,
I
like
think.
in November, December, and maybe even October, there was no like good gap and craps or gap and extensions. There was like very, very little. And I know because I remember seeing everybody like kind of struggling on the small caps.
Yeah.
And I was just trading big caps. I'm like, what's the problem, guys? And everyone was kind of having a hard time with it. So, it's probably time where the small caps are going to come back and the setups start working again. There's these periods where they stop working for a month or 2 months. And that's where what I was saying about tracking is important.
Yeah, like I can imagine because like I've been trading for a few years now, but I can imagine because every time I see Christmas season is rolling around, that's when stocks start going up. But usually January and February, that's when things start tapering down. unless it was like last year 2021 when GME like popped everything up. But typically, I think this is around the time where it's okay to be a little bit more aggressive. Just be a lot more aware of any reversals that could occur, so you could get out a lot more quickly because you can recognize that. But I think I'm starting to wonder, like, you know, let's say it's a gap and extension opens up at 9:47, and you know it's at the 2-minute J lines around, and there's the 2-minute J lines where that's also known to you know, reject or bounce stocks, but at the same time, oh, it's also right next to $2.50. There was like a stock that did that, not the price exactly, but pretty much that same kind of play where it's at the 3-minute J lines. I'm sorry, and at a $0.50 mark, it popped up for like one candle, and then it sold off for the rest of the day.
Okay, let's keep moving, guys.
Yeah, thanks for all that feedback, guys.
Yeah,
Appreciate it.
MJ, hopefully that's enough information for you to digest.
No, good stuff. Thank you.
That's where like sometimes we'll start talking and like I love these meetings because every time, every meeting, I mean, sometimes we talk about some of the same subjects, but we just get on these like crazy, you know, lost in the woods topics like about bookmap or trend lines or, you know, risk or psychology. And it's so fun because it's so much information to think about. Sometimes like after a bit, I'll be like, all right, guys, we got to stop here because I got to think about all this information that we just talked about. Like if we keep talking, it's just too much. So it's always a good time. But yeah, so here was another trade by Anthony. He had to go, but I wanted to still pull up his chart. This was another. This wasn't this. Let me see something real quick. What was it that you were trading here? Oh, LIXT. Okay, and then this is FRLN. Looks like he got a short here from this like kind of 270. You know, this almost this like wedge that's kind of happening like that. And he primarily trades, I think, oh, he traded this into the open, so that's interesting that it worked so well. It didn't even pop up. But yeah, here's just kind of a similar, in my mind, what we just looked at, this is very similar. If you don't look at the time, but look at the pattern, it's very similar in my mind to what we were just looking at. You get this strong run up, right? It rejects this like 330. It kind of like tried a couple times here and rejected it. And then it makes this like next little wedge pattern like that. And then, so this could have been a good area to short in using the high of this 315. There was probably some heat map liquidity. Just like Pete was saying, it like held 315 and then all of a sudden it was like resistance. So once you see the new lower high forming here, I think that this could be a good area to take a starter. Target 1-minute J line, so you made it to your target here. This was the pop at 840 that it did, and then this thing just faded. You would have just been holding this thing.
I think Anthony's doing strictly J-line rejection. I think
Yeah.
Jay made that comment, right?
Yeah, because he's got work and a couple other things going on. So I think that he was just focusing on the one setup, and he was saying that just by focusing on this one setup, he has improved his trading a lot because, you know, it gets difficult when you're taking golden zone rejection, which I think the golden zone's like right around here, based on from here to here. The golden zone's probably right around here. So this was a golden zone rejection. You had kind of like a trend line break here like this, you could say. Pretty ugly one, but it's there. And then he took the J-line rejection into the open, which sometimes I feel like a lot of times this probably doesn't work because if you get the real volatility at the open, that might be pretty difficult.
Yeah, I think Jay said like 80% win rate or 80+% win rate on these JLRs.
Yeah, but that's like what time frame does he actually was he saying that works, and what criteria?
So
You know,
Derek,
because if we look at J line rejections, you know, they don't. It's not really 80%. It's only in a certain, you know, formation, right?
yeah,
It depends what you're trading, right? Like if it's big caps with the daily trend, breaking PDR, you know, the dailies, the 1 hour, everything lined up, then yes, it's gonna work. And then you get it between the time of 9:30 to about 10:30, sometimes even later. It's fine. It's gonna work. About 80% of the time, actually. Yes, maybe actually even better. Um, but again, you know, we can only trade one of these setups. We can't trade all of it. So, I mean, if you are hitting close to 80, you're trading it correctly.
so there is one more pattern over there in that golden sun rejection area. So we can see a clear head and shoulder.
Yeah, this being one shoulder, this being the head, and this being the other shoulder, Remen.
Yes.
Yeah. This is kind of like the hunchback head and shoulders or something, but yeah, I mean that would have been a good setup to kind of see like just the head and shoulders pattern. It was a good indication.
Yeah.
You guys got any other thoughts on this? Something that I'm not pointing out?
Is this a gap and crap, guys?
I mean, it does fade pretty hard from the open, and it looks
Yeah,
like
I
Yeah,
mean,
it's a gap and crap.
it's a gap and crap, right? Yeah, I mean, some of these gap and craps, they just like open, they barely do anything, and then they just dump straight away. I guess this is like the easiest version of it, right?
I think how we could define the difference between gap and cap and gap and extension is that if it loses more than 10% or more than 17% from the
Yes.
top, that if it loses more than 17%, it's a gap and crap.
Mm-hmm.
If it just up to 10%, then it remains in the gap and extension territory.
Yeah.
Mhm. But also, like what I kind of define, yeah, the 17%, like you're saying, Mugen. But also, I like to see how it actually reacts at the open. Like with the gap and crap, it's supposed to just like fade right at the open, right? But sometimes we get this like almost similar to like an extension move, and then it fades. So
Well, actually, with the gap and crap, actually, from what I understand, um, what normally happens at the open is we look in for a rejection at the 1 minute J lines, and that rejection after the open is the confirmation that okay, there's a probability of the gap and crap confirmation. Without being too, just my honest opinion, I think here it was quite lucky keeping this trade open into the open, and it worked. Obviously, it worked accordingly. But with the gap and crap, I think what I understand is we look for that rejection out the gate onto the 1 minute line, and that is our that is our confirmation for going for the gap and crap. I could be wrong, so if anybody wants to help.
And I think, Megan, you're right. I mean, I think at the open, you're supposed to, it could pop up into the J lines and reject, and that would be the confirmation. That's my understanding as well.
Would be nice really to have him explain, you know. I mean, we see it right now. Hindsight is pretty clear. It's a curl down break. And I'm interested in knowing how he managed this, you know, coming into the open. Like, did he take out and then trail break even, and then sort of just like it didn't really go back to, you know,
I
to the
think
J
you
lines
can, I
and
think
just
you
like
can,
held it.
I think you can see he took the cover into the wash, and then
Yeah.
it held, and I think that's when he hit. I think maybe even break even, but break even would have stopped him out. So maybe he risked like a couple of cents into the open,
Okay.
basically.
And he's took
Right.
two covers into the open already. So those two covers would have been they would have been profit there even if this went back up and he got out at break even. You know, if he broke the J lines, he had two. If I'm not mistaken, I think there's two or three covers before the 9:30 open. So that was okay.
Or he could have taken that and just reshorted at the JLR.
Yeah,
Yeah, if
maybe
it popped up.
waited, but it never did. Yeah, it's I think same was on Friday with HG8SH I think as well. It just faded, never gave
Yeah,
up.
that thing just straight down disappointment. We didn't expect that. But do you remember Joseph mentioning yesterday that this is what we're looking for on HGSH, where we expected that to just collapse, and the other one, which is what did you just say? A, what was it? The A, the ticket that you,
HGSH.
yes, that one. We expected that for the J Lines curve because of the institutional ownership and stuff. And Joseph did mention that's what we're looking for, but the market don't give what we're looking for, and they reacted in complete opposite behavior to what was expected.
Which one? What was it? HGSH, you said?
Yes, with HGSH, we were expecting, from what we had seen and it being a daily POS stock, um, we were expecting this to completely fail um, all day, all day. But it wasn't the case because I think this sort of had the behavior of sort of midday. It looked like it was coming up. What do you call that? You know, I forgot the word. When towards the afternoon, the stock makes its way back up to pre-market highs or the
The
morning
afternoon
high.
long. The afternoon long.
And no, there's another. It's part of that manipulation pattern. You guys got a name for it in the room. I'll get it. I'll get it in
Height of day clear out.
clear out. That's it. Yeah, it looked like it was going for a high of day clear out. Um, so it was just really, really playing, quite a bit of games. I think we thought this thing was just going to wash down, but it was the other one that actually done that. It just didn't stop dropping all day yesterday, which was the 70%, 76% institutional ownership. AG,
Type it in the member in the
yeah, I'm going to get it now.
in the general chat of mentoring, please.
I think with this HGSH, I think the whole move basically happened in pre-market because it traded quite high volume in pre-market, and you can see it like already. You draw the trend line, so it popped up, it faded, basically rejected the VWAP, and then just kept fading. So it's like you almost got your whole day move in just in pre-market, and then it just exhausted completely at the open. Didn't have anything left, so it's like faded above under. Let me draw. So let's say you have this level, so it held this, faded under it, retested, faded lower, and then you sort of got like another level. You would say somewhere like this, where it rejects this. So not very good with drawing. So as well, it like held this, tried to hold this level, push off it, reject VWAP, fail under, and then that's it. So basically lost two levels and completely died before it even managed to pop back into here. It never gave it any at the open.
A good trade would have been at the open on that stuff of the 9 EMA, but I was looking for the stuff of the J lines. And then I asked the question to Joseph, and he says, if you're quick enough and if you can see this, but then you remember yesterday morning out the open, bookmap wasn't working properly. So we
Yes.
couldn't really have enough. I didn't have enough confidence because I like to see the stuff with the heat map on bookmap. And then I thought, hey, you know what? I'd rather not take a chance with that. And I didn't do anything. I waited, and then later on took a trade on MRI and.
And to be honest, Jay actually mentioned a couple of times that you can take these gap and crabs, basically rejection of 9 EMA if you open under and then you stuff into 9 EMA. So he says you can take those, but yeah, you need to be fast and honestly expected a move to actually push to VWAP, which never came. I was expecting at somewhere like here 280, 290, basically push up to there and then fade, but never came in and just never took it. So
Yeah, I mean, this one, it went to all the targets, right? If you were getting here, it never came back up. So, I mean, if you were shorting it here for this trend line break or potentially a gold zone rejection here in pre-market, you made it to the 1 minute J lines, the 3 minute, like the 200-ish area, and then here's 1,000 at 9:45. It made it. So,
But you got these big wicks right there.
yeah, but those you most likely won't be stopped out by those because, well, first off, you don't have a stop, but these are just late prints. Like, so on time and sales,
Gotcha. Okay.
they you know,
They don't like level 2 or anything. They don't show up on level 2.
Ah, gotcha.
yeah, they're just clearing their book, and then on if you watch at 8 a.m. the time and sales, you'll see this like 320 price will like print on time and sales like it was like a transaction that went through, and then the price will be down here. So what does the candle do? It shoots up like this, and then it goes right back down, all because of this one print.
It still scares me every time I see it. It's
Yeah.
like, holy shit, what's happening?
Yeah,
It is. I used to get so shocked about what's going on. But then where I sort of realized it was when I saw that nothing happens on the level 2, and it's just this thing going up and down. But your blood pressure is not good for the heart rate.
yeah, just pay attention to time and sales at 8 o'clock, and you'll see the print come through. And I know that, like, let's say you're a big institution, if you're like accumulating a position, or like they kind of like build positions over time, and then the final, like, I think it's like an average print or something like that happens, and it goes through the time and sales, even though like maybe you were buying and selling back here, but I think they're like clearing their books, or the prints happen like from the average of that position. I can't remember how it exactly works. I know there's somebody here that knows what it is, but it ain't gonna get you.
If it was just a coincidence, but I seen this after hearing about it somewhere else about a year ago, and even though those things don't matter at the time, but if you look at the pattern of this, that week always happens at 0800, right? That massive
Pretty much.
week, massive tail, always at 0800, and always that 0800 wick or tail will be significant at some other point in the day.
Yeah.
It will either make its way back up to that point or break down to the low of the tail. So because it's all institutional orders that go through at that 0800. Most of that is all institutional. So sometimes the top of that wick or the bottom of that tail plays a significant part. Not significant as in, put your stop order there, but it makes its way around towards that. Whether that's just a coincidence, but
No,
more,
it's true. My friend, he draws a trend line at the top of the wick, or if it wicked down at the bottom, or he'll draw like a horizontal line, and then he'll watch the reaction if the stock gets back to that line. Like sometimes on big caps, you can see the day will, like, if it like wick down, the day will like fade down to that area. And
Yes.
Wow.
yeah, I mean, sometimes there's a reaction there. Not every time, but sometimes. So
if you look at this stock later on in the day, if I'm not mistaken, I'm sure it broke that 320, and then it started to even break past the pre-market high once it broke that point. I don't know if you could move the chart a little further.
yeah, here, let me.
I could be wrong though, but I'm almost certain that it did break that area, and then it went and broke out past the pre-market high. Look, or almost to the pre-market high.
So got to that 320, popped through
And then
there
popped
with
in.
volume, and then looks like it faded back down, but it was curling back up on the J lines.
And that volume came at that 0800 level as well.
Wow.
Funny.
Yeah. So
It's
that's,
always worth drawing a line on that.
It's just
Definitely.
something worth watching. I have a buddy that like puts his trend lines on those every day. So
The 0800, especially if you're looking for that as you're, that clear out, the end of day clear out. And those things.
yeah, it's something like that. I can't remember what it's called. I wish what's his name was here, Daniel Weiss, because he knows exactly what it is.
Late day clear out or something. Sure, it's called.
Or would they say it's like late prints is what it's also called?
No, 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 no. I'm talking
Oh,
about.
this.
Yeah, that's it.
Yeah, the later in the day clear out. Yeah. Okay. Any other thoughts, you guys, on some small caps?
I think it's called the backside clear out.
Okay, okay, that's it.
Just curious, maybe it's a little bit off topic, but we touched on it. Bookmap being down. I find myself becoming more and more reliant on Bookmap. Does everybody use Bookmap here, or?
I do. I'm also reliant on it.
Not everybody, but a good chunk of the traders do.
Yeah, I'm curious how, for those that learned without Bookmap, how much additional value does it provide?
I have an input on that. I think for me, it didn't really provide as much. Back in December, I actually stopped paying for Bookmap, and I got a refund and all that stuff, because I found that I could still, at that point, I could still read level 2 enough that I know where to identify in the chart alone where a market maker or where retailers are looking to short a stock or long a stock or something like that. So I already have an idea of where it's going to stuff. And at that point, I'm just looking at level 2 to confirm it. And then if it gets to that, I short it. But in regards to Bookmap, I've been using it I haven't had it for like a month now, and I found myself having the same kind of winning rate and consistency as if when I had Bookmap. Bookmap was there to like help you visualize it better if you're more of a visual guy, but for me, I think level 2 is enough.
I like Bookmap for entries and exits. Also for reading that stair step up, stair step down. I'm a big fan of Bookmap. So on the contrary, I must say that it was big eye opener for me. Only because I like the calmness of it. Level 2 can be a bit overwhelming, and just that's for me personally. So I like the calmness that the Bookmap offers, and I also like the combination of the columns. And Layman taught me something about using the volume profile column, and that has just been really, really a big help to me. But yes, I'm a big fan of Bookmap.
Yeah, it just depends. Sometimes spotting those heat maps can really be beneficial, but I know for certain people it can be confusing. I primarily use Bookmap for 10-second candles, so I can spot like breakouts and things happening on the big caps really quickly. But you can do a lot of it with the level 2 and time and sales. One trader, OTC, is a really great trader. He was using Bookmap, and then he kind of migrated away because the real way and old school kind of way of doing trading is using the level 2 and the time and sales. And if you can read that well, you can really have a good idea of what the stock's doing, how it's reacting at certain price points. So there's plenty of traders that trade without it that do well. I primarily trade with it, but if I'm traveling and trading on my laptop, I'll use it. I won't use it.
Can I add to that, Eric?
Hey, OTC, yeah, please do.
Good morning as well. Yeah, I mean, don't get me wrong. I used Bookmap for almost 7 months, and there is a lot of value in it. For me, the value was understanding what algos were doing, understanding where whoever was previously speaking, where the major market maker or big whale is sitting, the rigor is sitting in terms of liquidity on level 2. Also to watch how they're spoofing, right? That was probably the number one thing I learned from Bookmap. And then I used in the last 2 months, I did a lot more leaning towards the level 2 in traditional tape and less towards bookmap, but I had bookmap off to the side to confirm what I was learning on bookmap, and could I truly see it through the level 2 and tape alone. And then it wasn't until I had confirmed that on a technical aspect, but even more so psychologically, mentally, that I felt good that my understanding of level 2 and tape gave me enough confidence to trade with the same confidence that I did with bookmap. And I will say that, you know, I'm always looking at the good and the bad. I will say that for me, when I reflected upon the negative aspects of bookmap, for me, what it did, and maybe because I was young and trading small caps, but it created too much bias confirmation. Because a lot of times because of the spoofing, right? And this is specific to small caps, because you would see this heat map and you're like, okay, price action is getting to that heat map. It's getting to that heat map. It's getting to that heat map. And then it'd get there and they'd either remove or fill part of that size. But that's, again, a lot to do with the market maker and how they pull the goalie, right? Those clear out moves where they have a big level sitting there and all of a sudden they pull the goalie, they hit a bunch of market orders above the ask, and then flash the price up. The scare tactic happens, and then they slam the price again, and they put that liquidity right back where it was, and now everyone above, and I'm talking short side here, a short sell, everyone above is trapped, and then it fails. But I will add that I still think that bookmap, when you're trading real stocks, and what I mean by a real stock is mid cap, large cap, something with a high IO, something that's truly, you know, has fundamentals, AMD, Tesla, Nvidia, things of that nature, that bookmap is still a very strong tool if you're not, you know, if you're not so inclined, if you're more of a visual trader and not so inclined to staring at level 2 and tape all the time.
Yeah.
So yeah,
Yeah,
the
and I
point
think
being is that there's a lot of value in bookmap, and there was a lot of value in bookmap for me in the learning stages.
But I have a question for you too, because like the way I see it is like I get a good chunk of information at level 2, but I usually use that as a confirmation of what I'm seeing through price action in the chart. So how much do you depend? How much are you looking at price action in relation to level 2 now? And if you were using bookmap prior to that, like what was the amount of times you would base something off something else first, if you know what I mean?
So it's a tough question, right? Because my trading's evolved so much. But so you're asking how much I relied on a system like bookmap to prepare my thesis before actually taking the trade, or when I'm
Well,
pulling the trade.
how I go about it is like, okay, I have the volume profile put up in pre-market. I see where the highest volume node is, and then at the same time I look at where the J lines is, the pre-market consolidation, and then I make a thesis before entering, like, okay, it could potentially stuff here, and so what I'm gonna look for is at the level 2, because I don't have bookmap anymore. But if I did, I would look at bookmap even more to reaffirm if a heat map was there. But at the same time, now I don't have bookmap. Now I'm looking for a level 2 to confirm that for me. That kind of thing where I base something off of something else first, and then I use that as a play. I'm wondering, like, how do you go about it? Kind of.
Right. So your trade thesis, so that you're not just blindly trading price action. Okay. So that really depends on volume for me. So say yesterday, MRIN, MRIN, right? Something very similar. I went to my, and I use Sierra charts for volume profile because you have the order flow on there, right? So I don't use the volume profile on DOS or on, you know, on my trading platform. But I use the top down effect. So I went to my daily and I said, okay, based on my order flow, my volume profile with footprint, which is tape, It's a visual tape of old days. I go and I look, where is this major seller sitting and what kind of imbalance do I have? Do I have a bid imbalance or a historical sell imbalance? Obviously on MRIN, you have bag holder levels. And then
Yeah.
I go to a lesser time frame, say a 30-minute, an hourly and a 30-minute, and I draw some trend lines. Where are there areas where support has turned resistance, where resistance has turned support, etc.? Where are previous stuff levels? And I mark lines based on that. And I have a table of colors. So if basically, an example is if I draw a trend line or a resistance level based on the daily, it's red. If I draw a trend line or resistance level based on the 15 or the 5, it's white. So I have a color coded system. That way I don't, in the heat of the moment, I know exactly what time frame I derived that level off of, and that in my mind tells me how strong it is, right? Because the smaller the time frame, the less you can trust it. I never set a trend line or a level based on the 1 minute other than the pre-market high and those intraday levels, right? But I still don't fully trust those. I'm not going to load the boat at that level until I have some sort of tape confirmation. So to answer your question, I go from the top down. I look at the daily, then I'll look at a 60 or a 30, and then I'll look at a 15 and a 5 or a 10 and a 5. I don't trade using the 1 minute. I am a small cap short bias trader. I trade using the 5 minute, but I have the 1 minute off to the side in case I see the 5 minute kind of chopping around in an area that tells me that it might be developing a micro shelf, a 1 minute shelf, right? I'll trade the matrix, looking for where they're distributing their shares if we're talking short bias.
Right.
So I go top down with that. To your point of the levels in the intraday, yeah, they're very valuable for me, but I'm never going to take a full entry just because that level is hit. What I'm going to do is I'm going to put in a limit order at that level, say like Emrin, I put in a limit order based on my trend line that coincided with 495. I put a limit order there for a fifth of my size, and that's what's called I think Scott Switterman on Twitter calls it a fantasy order. And what that does for me is it engages me. So the moment that order is filled and my platform notifies me, hey, you've got, a fifth of your position on, now I'm focused on that tape. Why? Because my pre-trade thesis is being, to a certain percentage, is being confirmed. And now I'm watching the tape and I'm watching price action at that level, and I'm seeing, okay, is it going to go higher or is it going to stuff? And if it's confirming my thesis, then I find my point to load the boat. And if it's confirming my thesis with vigor, then I find an opportunity to load the boat plus more, right? I'm willing to use all my bullets for the day on one trade if something is confirming to more power. But then initially, based on your question, my initial response was that it's based on volume. So if, let's take SOPA, S-O-P-A. The day SOPA was squeezing like crazy, me being a short bias trader, all that is out the window. Now, all I'm looking for is clear outs on a 5-minute chart. Anytime a candle clears out and I see volume divergence, I'm putting on size. But as soon as there's any kind of flush, I'm removing size. I'm never giving up break even until I see on a large time frame that there's a top in or time of day, right? That one I think topped out like at 1400. So based on volume, if it's an M ring, something that has what I call look left, a lot of bag holders and a lot of history and a lot of wicks on the daily to the left, then it's more of a trade thesis kind of trade like you're talking about. If it's a day one where they're manipulating the hell out of it, then I'm more of a scalper mentality, and I'm willing to make my 10R by trading it like Kyle does, right? Where I'm just in and out, in and out, in and out, in and out. I'm just taking little bits. It's kind of the algo mentality, right? Where they make X amount of money off of 3 cents. Obviously, as retail traders, we don't want 3 cent moves. But if I see that there's a range of 30, there's a range of per candle of 20 cents or 30 cents, 40 cents, then I know based on that I'm taking 50, 75% on any dip that goes 30, 40 cents. I don't look at my P&L until I'm done, until I've either exhausted my mental capital or I've given up focusing on it. And then I look at my P&L and I'm up 10, 15 R just by, just by eating chunks of the price action away. But they're two completely different mentalities is the long and short.
Right. Yeah.
OTC, if I can ask a quick question. So when you set your limit orders based on your thesis, how far, I mean, do you know where your stops would be at that point, or are you working purely off of price action to determine whether you're going to stop or not?
So I'm a big advocate of the way we word things, right? I'm not scrutinizing the way you word it. I'm just adding value to the way I think about it. Now, when you say, do I know? No, I never know. I have an idea, and in my mind, I set a percentage of how strong that idea is. If I put a fifth size at a certain level, I never like to give up more than 30, 40 cents on a move. But it really just depends on the range that I've set on that higher time frame. And now we're talking a trade like MRIN where the bag holders are sitting at a set level based on the daily, right? A very high time frame that confirms that it'll likely to stuff. So for instance, MRIN, I had my first order was at 495. I think I put it like 496. And then I was willing to give up on a trade attempt to 520. And so when it popped into $5, because of the way the tape, well, to answer your question, I do have an idea of what my max risk is. I never put on any kind of size, whether it's one share, I shouldn't say that, whether it's a fifth or an eighth, I know where my max level is. Obviously, if I put on half of my size on my first entry, that risk level is a lot tighter because I use a monetary amount in the back of my head to set that risk, right? Based on my account value and a percentage of that account value. So yes, before I put on any trade, I have to have a somewhat good understanding of what my risk level is, most importantly, and second, where are my targets, my take profit targets. And if I put on a blind trade where, it pops up on my scanner and I just get in because I'm reading the tape well and I see something, and I put on a trade where I have no idea where my take profits levels are, then I'm never giving up break even, right? I know my risk. I get in. The move makes a 1R move in my direction. My break even is in. And then I'm trying to kind of assess, okay, now I need to look at a higher time frame and see where the demand levels are, where I'm going to take profits. But the point being is that I always have an if-then statement in my mind prior to entering any trade. And for a while there, when I was not very good at that, and I was breaking that rule, what I did is as soon as I took a blind trade, when I say blind trade, I mean just an entry out of impulse or FOMO or whatever, whether it was a good thesis or bad. If I got in a trade and I realized that it was just a impulse trade, is what I title them, then I would immediately exit the trade, right? I did not have the freedom or the luxury to be in that trade because I don't have any kind of thesis, whether it's a 1 minute, 5 minute thesis or something that I developed the night before. And that was just a discipline aspect, right? It's like, okay, you're just taking trades because Jay's calling them out or because X friend in the chat room is calling them out. What I call an impulse trade. So immediately get out, and it's not for you. And through that, doing that over and over, I developed an understanding of, okay, so now I need to have a strategy for those impulse trades, right? I have to have a certain criteria that I look at, whether it's insider ownership or whether it's this or that, to take those trades. And a great example of that, I won't go into detail now, but a great example of that is my halt and fail strategy, right? Because you have to come up with your thesis in 5 minutes while the stock is halted.
So OTC, can you walk us through how you would trade this on a 5 minute? I know you mentioned like, you got this 520 level, but maybe you can kind of break this down a little bit more and kind of walk us through how you would handle trading something like this.
Okay, so on that, yeah, I didn't use the daily. Go to 20-minute for me.
Okay, I got a 15-minute.
Yeah, 15 will work.
I'm gonna go farther back, or
no? That's good. So see that push there on 1600 hours there, the initial push. I believe at the bottom. So draw a trend line from there up through the bottom of it's like 8 a.m. the next day. Yeah, like right there.
Like
I think that was, yeah. Okay. Well, where's the actual trade day? Oh no, then that's not it.
This is where it actually started trading at 9:30.
Okay, no, then that's not it. You can delete that. I'm not at my station, so
it's
scroll
all good.
back. Delete that. Scroll back on that 15-minute. See that little? Okay, see that little curl right there on? Where is it? Okay, I'll move the chart. Yeah, right there on 1229.
Okay.
See the bottom of that? How it trends up? Draw a trend line through that.
Like this?
To the bottom, yeah. Yeah, to the bottom of the day that it pushed, to the candle of support. A little lower.
A little lower.
That's good. No, that's good from there, but where you end it. On the push, basically there where you have like 460, 480.
460, 480, okay.
A little lower. Yeah, right in there. Why? Because the stock pushed and then it retested, right? It retested support there, and obviously it gave it up at some point. But that was resistance turned support that it broke through. That was my trend line right there.
So you drew this trend line because it was curling up here, holding this like little micro trend for about 2 days, right? Then it breaks down.
Yeah, because there's a significant amount of price action there acting as support.
And it kind of,
I think it's a little low because it basically peaked out like at 490. But yeah, you get the picture. So I used it, and plus this is a 15. I used a 20-minute, and see how over there on the day where it pushed, you don't have it high enough to all that support.
Okay.
So if you move it up a little,
like that.
There you go. And see, now you can see why
kind of
that, and then okay, and then if you draw a horizontal line across that range, that same range, which would be like the top of that. See how you have a crossing point there? Lower,
around 475.
475, 480, yeah, right in there.
Yeah.
So see how you have a crossing point there? And so that's why any overshoot of that, I was interested. And then on that candle to the left, the peak candle, expand out that 15-minute a little. Yeah, that candle there.
Oh, zoom in.
Sorry, I want to zoom in. Yes, please. Okay, so now perfect. So now reduce that to do that and reduce it to the 5-minute. Okay, so now I take the top of that stuff candle, the first stuff candle there, that one, not the top of the wick, sorry, the body, and then the bottom of it, and draw another line on that.
And also, you guys, just wanted to note real quick, as OTC was mentioning, like color coding. On my mouse, I have like buttons on my mouse, and you can color code. Like I have this color, and then I have this color, and I can draw a trend line, and I can draw a golden zone. So all from my mouse without having to click. So as he was mentioning color coding, it's really easy to do that, and it's very helpful because I color code the lines too. So just a thought. Go ahead.
So that's how I develop my thesis, right? Like I said, I never draw a price line or a trend line unless it's a tiny microstructure for ads off of the 1 minute. I do everything off the 5 minute or higher. So now look where the trade happened. And obviously, in hindsight, right now, you guys are thinking, well, yeah, he can see it right now. But I drew all of this before I took the trade. Right.
And
so,
and you were taking it around here, and it was getting you triggered in at roughly $5. You were saying.
right. And so the reason is, even though my levels don't, this is all speculative. My levels don't match up exactly where the stuff was, but also you have a psychological number there, $5, right? And so I was willing to go as high as 520, but when I saw the live tape as the trade was happening, you could tell that the market maker was just popping action. There was no follow through with any of those pops. The spread, they were using the bid and ask spread to push it up. So the bid would catch up, and then he would expand the spread and pop the ask higher. So it was inorganic price action, and because there was no volume, there was no new buyers coming in. I didn't think this thing could break 5.5, 5.10. It would be very difficult for them to get above $5. And so I put that fantasy order 595, 596. I got filled, and then I'm reading the tape, and I saw that very inorganic flash. And so immediately when that flash happened, my eyes are purely on the level 2 at that point, and I'm looking for the bid to get above a certain number. And so when the bid flashed above 496, because this was so thin, I slammed the bid with my size, and I think my average was 497.
Cool.
Right. And at that point, I'm tightening my risk to a max of 410 or based on my share size, and no longer willing to give up any higher than that because that's my max dollar risk. At that point, I'm thinking P&L. I'm not willing to give up more than X amount of dollars.
Explain that last part one more time. At 495, you get in, and then where do you start tightening the risk?
Okay. So I have this thesis. I'm not looking at that. I'm over here looking at ABSI, and I'm over here looking at ears, and I was looking at GameStop. So I have a limit order set at 496, and then I'm not paying attention to that chart at all, right? I'm not trading it any lower than above 495. I don't care what happens if the stock gets to 450 and fails. If it doesn't get up to my level, I'm not trading. Okay. I'm trading GameStop. I'm scalping GameStop. My limit order on MRAN fills with a fifth, and that gets my attention. Now I'm in GameStop. I have a decent position, but I set a hard stop, and I draw my attention away from GameStop, and I go to Emmerich. Why? Because GameStop was a thesis I prepared 20 minutes before the trade, whereas MRIN was a thesis I prepared much earlier because it popped the previous day. After hours pops typically end up failing, especially if they have bag holder central. So that limit order engaged my mind onto the tape. Now I'm watching the tape. There's an inorganic flash that because the stock is highly illiquid, I'm not going to try to get in on the ask because I won't get filled. And that is for me psychologically, if I don't get filled on a trade, then I start chasing. So I developed an understanding of liquidity and volume based on that trade and how to trade it on the bid or on the ask. Obviously, if I'm trading SOPA on a day one, I'm getting in on the ask every time because it's so liquid and doing so much volume that it's easy to get filled, right? But back to Emmerich. So now that I'm engaged on the tape, I see this very inorganic flash where they're trying to flash it up to 5. And I'm staring at the tape, at the level 2, at the bid and ask spread, As soon as I see price pop over 495, 496, I slam the bid, right? I'm trying to get filled as close to 5 as possible. I think I had a 497 or a 498 average, but I put on full size, right? As soon as I saw that stuff candle and then the next candle pop a little, I added a little more. I had high conviction. Based on that, yes, my initial, when I had your question was my risk. When I had the 1/5 order, my risk was above 520. Okay. Once I put on the full size, my risk tightened to right around 510. I think I put it at 508.
Oh, okay.
Yeah. Once I put
And
on the full size.
and let's say you're at max risk, it's at 510. Is that max risk if it comes back up to 510? Is that a 1R loss or is that a couple R's?
No, that's a 1R. Yeah.
That'd be
Never
1R.
knew. Yeah.
Okay.
So if my fill is 498, right? I had 496 fifth size order on that limit order, and then when I slammed the bid, if I have a 498 average, I don't think it was that high because that's the top, and I think I had a 497, 496 average. So if I have a 496, 490, so I'm giving up 10 cents, and I had my stop like at 512 or something like that. So I'm giving it a little bit of what do you call it? Of slippage, I guess you could call it on the risk. That's essentially a 1R, but then it stuffs, right? And on the next 5-minute candle, I added at the top, I added another 50%. So now I'm at a 1.5 risk. So now my stop is, I think I brought it down to 501.
OTC,
But
if I can ask.
I had high conviction based on the tape here. There was no way that thing was going back above 5.
So OTC, if I can ask on that second candle, that red candle right there, if that had started creeping back up to your entry, would you hold on to it? Would you give it enough room to get up to 510? Or would it invalidate your thesis at some point where you get out earlier?
No, it wouldn't invalidate my thesis, but I wouldn't have 1.5 size, right? So load the boat plus 50%. I would have removed size. So my broker uses a FIFO, and so I'm always trying to average up, but I'm not averaging up into a trade oversized. So I will immediately remove, if I think the tape, if there's a true bid support there coming in at 480, 490, I'm going to remove size and try to get in higher, right? And if this thing gets above 520, if the bid gets above 510, 515, up to 520, my original thesis is invalidated. At that point, I'm out completely, and I'm reassessing the trade. Because we all have this micro mentality at times, or in our young careers, where we start getting chopped up on the front side, right? Because we're like, no, it's going to happen. It's going to happen. It's less of a thesis confirmed. It's more of a hope. And so I fell into that trap for a long time. And so now what I just do, if a certain level is broken, or if a certain level has support, I'm out 100%. I'm stepping away, meaning I'm going back to higher time frames, and I'm reassessing my trade.
Now,
yeah, if that candle, to your question, Mike, if that candle would have caught a support, I would have removed 50% or 75% and just let price actually get higher, right? In this case, I didn't have to, and in this case, I didn't plan to remove that much. I would have just removed that excess 50%, because this thing was inorganically front side pop. Like, this thing had absolutely no volume. It was going to fail. It was just a matter of how long would the market maker manipulate it at these highs before it failed. And that's also based on how many tickers are active that day, right? We know GameStop was active. We know AMC was active. Those are my overall macro thesis on the day was the apes are going to be focused on removing some of their bag if they can, because GameStop was popping. AMC's got bag holders, but not at 25. DWAC was popping, and Fun was trying to pop.
Now
And so
OTC
I was thinking people are trying to remove their bag, so Emrin is not going to be on anyone's radar. Go ahead.
question about the tape now, just like hypothetical. Let's say, like you were saying, if 480, a bid support was starting to appear on the tape on the level 2. Now, what would that look like if you can just like kind of create a hypothetical? Like you would see 480, and then you would start to see large orders there, and maybe it's testing 480 and it can't break through, or would you see it slip to 475 and then get bought back up over 480?
No, so on a small cap, it's more about speed and volume. So on a small cap, since you have so much manipulation, there were a lot of on the bid on the level 2. There were a lot of large orders being put in at 494, 493, 495, but they were just spoofing. What I want to see is when the ask moves up, how quickly does the bid move up? Right? If the because that's what scares out a lot of new traders on these types of trades is that you're in at like 480 and then all of a sudden the ask pushes to almost $5, but the bid isn't chasing. And if the bid's not chasing with volume, they're just doing that to scare out all the shorts, the inexperienced shorts. And so it's based on, yeah, to answer
Like
your
if you don't
question,
see any crowding on the bid, like you don't see a bunch of bids like aggressively trying to go after the ask. So that's where like the spread loosens up, you're saying, and it scares people out.
correct. And it's speed, right? It's speed and volume, which the speed is often based on volume on, moderate to high liquid stocks. If this is, doing 25x float rotation, then that's a different story. But yes, so the tape was not speeding up and the bid was not chasing the ask. What the market maker was doing was increasing the spread by moving the ask up, but the tape wasn't speeding up and the orders were not filling that spread from the bottom up, from the bid to the ask. So by the market maker just spreading the ask and enlarging the spread and pushing the ask up, he's just trying to scare shorts out that got in at 470, 480 by creating that spread. Does that make sense? It's hard to explain.
Yeah, totally. No, totally. I really like getting into the tape reading as well, because those are sometimes the little things that people don't really know, and those little tidbits add up and can really improve tape reading skills and conviction.
That's amazing because I have it recorded. I'll have to look at Emran again because I know about the speed of the tape, and I also look at the order of the size. But sometimes it's hard to catch when the tape is going so quickly. But I think I'm fast enough to be able to catch if there's a larger spread occurring when the bid isn't chasing the ask. I didn't think about that too much. That's awesome.
Yeah, another way to pay attention to the spread, you guys, just kind of as he's mentioning it, is like if you're looking at Bookmap, you can see you got these like lines behind there of the spread, and it's kind of hard to see, but you got these lines like this of the spread, and at times you can see the spread widen and tighten in certain breakout situations, and you can kind of use that as a signal for taking breakouts or identifying if it's not going to work because something changes in the spread, and it's like a clue, like I was saying earlier, all these little clues add up to having more conviction in a trade. So that's one.
Now you're predominantly a large cap trader, right?
Yeah.
Okay, so keep that caveat in mind, folks. When he's, the price action is very similar, but it's not at the same time. So
it's not similar at all. I feel like the price action
So
on small caps is so different. But sometimes those little bits about thinking about spread or certain situations works either way.
Yeah, absolutely. A lot of value in what you're saying is just important for folks to keep in mind the asset class that you're trading in comparison.
OTC, may I ask quickly, with regards to the example that you used with MRIM, and you said that if it gets away from your normal type of trading, so you had your stop loss as an example 510, but it was based on purely on your profit and loss account, and that's what you're basing it on a number. And now, if the technical stop on that was at 5:15, would you be flexible with your stop?
It really, in this case, yes, because this thesis was created hours in advance, right? So this thing popped up the previous day. I know based on my trading and, if you will, stats. I'm not big on, keeping a spreadsheet of stats, but I know just from a trading experience and my recollections that stocks that are pumped in the after hours tend to fail the next day. So yes, based on that, I'm willing to lean more of my bullets. So when I say bullets, right, let's just for a round number. I mean, these aren't my values, and just because we're talking, I don't like to talk money, but let's talk money in this case. Let's just say I have a total risk of $1,000 per day, and I'm not really seeing anything. And Emran just is a really strong thesis for me. I'm willing to risk 7 bullets, right? I'm willing to risk $700 on one trade on Emran. So yeah, I'm willing to give it a little room, but I'm not willing to give it more room if I don't predetermine that thought that I just told you beforehand, right? Okay, I'm willing to risk 70% of my total day's P&L on this trade because it's high conviction. And if it hits that 1,000 mark, am I willing to give it to 1,100 or 1,200? Maybe, but very rarely, right? Because I have that predetermined level where 520, based on my size, if it hits 520, that's basically 80% of my MDL.
Yep. Okay, I got that. Secondly, it was interesting that you mentioned about the spreads and those lines on Bookmap, because I can clearly remember it reminds me of a lesson that I watched on Bookmap, and where the guy explained it quite nicely in that those lines being the ask and the bid. When you see that those lines have been stretched and there's no volume dots on there, that means nobody wants to do business there, and that price is not going to stay there. It's going to either come down, or if you see the red dots increasing when nobody wants to do business there, it's a good probability that that price is going to drop there. And the opposite, obviously, at the bottom, if the sellers didn't want to do business as well.
If I'm understanding your question, the way I would answer that is based on how I trade. Is I do not low slam. I don't chase floors.
No, OTC, it wasn't a question. I was just saying thank you for bringing that topic up on the spreads, because it just rang a bell and it makes so much of sense. Those lines you explained on Bookmap.
The heat map?
No, you said with regards to when the market makers are moving the ask, but it's not actually buyers moving the ask. And so you would see the red line and the green line on the Bookmap. You just mentioned that a little while ago?
Yes, sir. The spread. Yeah, the spread moving. Okay. The enlarging, the spread getting wider, the spread tightening. Yeah.
Yeah.
Okay. Yeah, glad that confirms something for you.
That's good.
Yeah, I know that for me on big caps, when I'm trying to catch a breakout, like sometimes you get these really nice breakouts and you'll see the spread tighten up. So, okay, any other final questions, you guys, for OTC? Because this was kind of a special time that we got him in here. And if you want to start making $10,000 or more a day, he's the guy to start asking questions. So,
yeah, really appreciate it. Just want to say that that's just incredible knowledge.
Yeah,
really,
and if you guys don't have his social media, his Twitter, which he does a lot of good posts there, I recommend doing that. OTC, if you can kind of share your Twitter in the mentoring general chat, that'd be nice. Or if you want, I'll share it.
I'll DM it to you because I don't have access to that channel.
You should, but okay, I'll that's fine.
Oh, to the mentoring channel?
Yeah, because since you were a mentoring student, you might have had to message them, but they added all the alumni, graduates back into the channel. So just a thought.
Okay. Yeah, mine says channel is read only.
Oh, really? Huh. Okay. Interesting.
But
All right. Yeah.
yeah,
I'll add your Twitter because you guys follow him on Twitter. He's got a lot of good thoughts on there too. Really good psychology. I spend a lot of time bothering OTC because once you get really comfortable with setups and your trading style, the next thing you're really working towards is kind of controlling the psychology and emotion. And he spent so much time doing that. So it's just a lot of great information.
yeah, Eric, thank you for bringing me on. Thanks for letting me spam your conversation. The last thing I'll say before I jump off is I learn as much from you guys as you guys learn from me. So, anytime you have questions or concerns, DM me. I'll be honest, if it's a lazy question, something that you can look up on your own, I'm going to be very blunt with you and say I'm not going to help you out. But if they're thoughtful and invoking questions like Eric has always done, I'm always happy and willing to help because I can learn a lot from you guys as well. So feel free to DM me anytime, and just know that I'm not going to waste your time, and I'm certainly not going to let anyone waste my time either. So, thought invoking questions. Eric will tell you that I'm always willing and happy to help out as much as possible.
Yeah, definitely.
Appreciate
So you guys reach out because that is a really good resource. But like he's saying, don't ask him how to calculate the J lines.
OTC, I just also wanted to say thank you for all that you do. I learn a lot from yourself, but I must also say to you, one of your greatest qualities is your humility, and that is something that I really learned from you as well. Very, very humble guy you are, and thank you.
Thank you. And Goblin guys, he's reached out many times, and I'm helping him as much as I can when I can. So yeah, I appreciate you saying that. Happy to do it. Thanks, guys. Y'all have a wonderful weekend.
We'll get OTC on here again, and we'll record it next time because we don't record these things unless it's a special guest, and I wasn't really expecting to have OTC on there. Otherwise, I would have recorded it because I know there's a ton of people that want to go back and listen again because it's so much good information to digest. So I'll schedule with OTC and we'll get him on here again. And also, you guys, if there's someone else that you feel we should get on here on a Saturday or on a Wednesday, one of the different traders, Kyle or whomever, I can message them and try to work something out too to get them to hop on because it's great to hear different perspectives. So so I think we should call it a day here. That was like 2 hours, and I know you guys will just keep talking all day if we could. So go enjoy your family, go study, and do some stats, do some replay. And we will reconvene on Wednesday and message each other if you guys got questions or something. That's why we're all in this group is I think that some people are kind of to themselves and they're just trying to learn trading. They lose certain days, so they're not in the mood to message someone. And, with a lot of traders, they like to talk when they're winning. And then when they're losing, unless it's like someone that they regularly talk to about losing, they are kind of silent. So you got to kind of just reach out to people because, a lot of us are losing at times or not doing the right things, making mistakes. So just feel free because it's a really good system we have here to communicate with each other. So
appreciate it, guys. Thank you, OTC. Thank you, Eric.
Yeah, you guys, I posted OTC's Twitter in the mentoring, and message OTC, tell him thanks, and we will see you guys next week.
See you guys.
All right, see you.
Much love, everybody. Bye-bye.
Thank you guys. Bye.